Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo, and Happy New Year.
Happy New Year to you, Jim.
Is there much effect? Is there much effect on business in the U.S. with the partial government shutdown?
There's a lot of headlines screaming about that. But, the numbers statistically show that in the past, the shutdowns really haven't had that much effect. Whatever happens, it's temporary. The people don't get paid, but they get paid later. It all balances out, washes out in the end. But there's never been one this long. Still not that long. But Trump seems pretty intransigent. If it extends for, weeks, months, more, I think you will start seeing things. As a libertarian, I want to say, great, leave it shut down, never start it up again. Only a partial shutdown. But the reality is that the government has its finger in the economic pie, good and deep. And so, these things do matter, and it is going to cause pain. And it'll be interesting to see who it hurts more. Right now, the polls seem to say that the typical American voter blames Trump more than the Democrats. We'll see what happens. But so the short answer to your question is we are going into uncharted territory. Nobody really knows, what a prolonged shutdown like this could do. But it's clear there are people who are not getting paid, and that will affect their spending. And it's a lot of them.
Do you expect some of those people will just quit their federal jobs and look for work elsewhere?
Boy, that would be the ideal outcome, wouldn't it? Unfortunately, I suspect that few will do that, or they will only do that if given no other choice. And everybody knows that this will at some point blow over. So I think they all expect to get their jobs back. And if they take a part-time job because they have to, they probably dump it, as soon as the government gets back going again. I would love to see a lot of jobs shaken out. If inefficiencies could be liquidated, it's a perfect time to try to do that. But that would take more political gumption than I think either party has.
With the general market downturn, what's that going to be the effect on business going into the new year?
That's a very interesting question, Jim. And I'm not sure that the market downturn itself should affect business going forward. The market is not the economy, as people like to say. It affects the economy, and with so many people having their 401k plans and so many investors, more people exposed to the stock market now than before, and people who had paper wealth before, now looking at less wealth, I think it does have more of a knock-on effect than it used to in the past. But even all of that, I think, is secondary. The bigger question is, why is the market correcting? Why has it corrected so much despite the blip up this year? You could hear it. It was really striking to listen to the talking heads in financial media, Yahoo Finance or Bloomberg or whatever. You watch these guys, and they really could not understand why the markets were selling off. We have record earnings, and we have all these wonderful numbers. Unemployment is so low. The market is wrong. Investors are being crazy. They should be buying the dip, but they're not. What's wrong with these people? Think about that. What does that mean? What does it tell you? It tells you these people have really no idea what's going on. In their mindset, they look at the numbers that they traditionally look at, and everything looks fine. The market shouldn't be selling off, so it's a fantastic buying opportunity. But in reality, and it doesn't even cross their minds to say, is this a warning sign? Maybe something isn't right. Maybe the market is telling us something. Or if they do, they say, well, but everything is fine. And they quickly dismiss it. very rarely do you get a Doug Casey or a Peter Schiff or a Lobo Tiggre out there saying, hey, folks, this is a red sign. There's something not right in Mudville. And I think that's very important. I think, a lot of crazy things have been done since the crash of 2008. These have had consequences. I think we've had a lot of funny money and phony economic recovery that the stock market was very susceptible to. And so these, the PEs may look sort of normal, but that assumes that there, aren't rocks hidden under the waterline out there, which I think we're completely surrounded with. So I would encourage people to heed the warning sign. But let's say I'm wrong, and let's say this trouble gets smoothed over, and 2019 turns into be another terrific year for Wall Street, right? The Dow and the S&P 500, Russell 2000, they all go on new highs this year. Even if that's true, I would argue that doesn't mean that everything that worked before will work again. That doesn't mean, for example, that necessarily Bitcoin goes back to 20,000. It doesn't mean that the short VIX trade that used to be a winner while volatility was low comes back. I think there are a lot of investment ideas that worked during the QE phase and related government activities and interventions that may not work going forward. So I think my personal, I'm not a crystal ball gazer, but my personal outlook is that the chickens are coming home to roost. The correction at the end of 2018 portends worse and more volatility going forward. I think we see a protracted bear in the not too distant future for mainstream equities. And that's good for gold and silver investors, safe haven asset investors. But if I'm wrong, like I'm saying, I think it's still not safe to assume it's just okay to go back to everything that seemed to work before. And in fact, I've written a report about this. It's free, and all your listeners can download it for free if you go to independentspeculator.com. There's something on the 7 expired ideas. And I encourage everybody to read that because I think these things could absolutely be toxic, regardless of what happens to the mainstream markets.
We'll have more with Lobo Tiggre, and we'll talk about those 7 steps in a moment.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Lobo Tiggre. So, Lobo, what are some of those expired ideas that just won't work anymore?
I think one of them that's highly trackable and should be easy for people to understand is tweets from the White House. If the president would say he's unhappy with Harley-Davidson for setting up a factory outside the United States, that would hit the stock. What we've seen, though, is that this tends to be short-lived, and he's tweeting so much now, and he's beaten up on this company, that company. Nothing really seems to happen, that investors aren't really even reacting to those tweets the way they used to. I think another area to be very, very careful of, people know about Bitcoin. I think I don't need to say too much about Bitcoin. And by the way, I'm not anti-blockchain. I'm just saying I wouldn't count on Bitcoin itself going back up, and to be very careful about which cryptos to get into, or even cryptos at all, as opposed to other blockchain technologies. But the one that I think is close, more near and dear probably to your listeners, is the great marijuana mania of 2018. You had decriminalization, you had legalization, you had a very large market. Everybody knew. People used to joke when I'd visit mining projects in BC that the biggest real business in BC was pot. And now it's legal, right? So it's a big business, and it was logical for lots of money to flood into this and for, fortunes to be made on the right pot stock. But now we get past the phase of legalization into the actual hard business of, making money in this arena. It's called weed for a reason, and it grows everywhere. So it's not necessarily an easy business. It's not, now that it's becoming more legitimate, it's not a guarantee that any one company is going to be a winner, or even that the sector as a whole will do well right away. At some point, there's probably going to be an Amazon of pot stocks emerge in the future. But telling which company that is right now in advance, very, very hard to do. And I think it's something that people need to be careful. If they're thinking, oh, pot stocks, we need to invest in this space, I think that's dangerous. If somebody has a credible, well-researched idea for why X, Y, or Z specific company will be the next Amazon or will do really well this year, that's different. But I would be careful of just saying, oh, marijuana, that's a great business to invest in now.
One of the problems, too, with marijuana is a very slow rollout. It's like the local authorities were shocked and had no idea this was going to happen. There's only a handful of legal shops in British Columbia. Ontario won't have legal pot shops until April, and then only 25 for the most populous province in Canada. What were the governments thinking?
Yeah, no, I get it. And if you think about it, it's actually quite analogous to things that we've seen in the resource sector, right? People get all excited about a new discovery, gold or copper in them Bar Hills. But then, it turns out there's a whole lot of work that you have to do even to decide whether it's worth building a mine. And then you have all the permitting and the infrastructure. And even when you build the mine, you don't really know if it's going to make money until you turn the thing on and see if it works. It's a theory until it happens, and you have to figure out the answers to the problems as they crop up. So it strikes me as, very similar in that there's all this excitement, right? Discovery, legalization, boom, there's this whole new wonderful thing that's going to be great. But then the hard work comes in of figuring out how to make all the working parts fit together and make a seamless distribution profitable for everybody. And then the regulators have to catch up with the reality of the business. And even once it's up and running, then you get to discover all the hidden problems, that weren't evident when it was theoretical. Same thing happens in the resource sector.
We'll have more with Lobo Tiggre right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, trade for China fell unexpectedly in December, both imports and exports. Are they struggling, and do they really need to get some kind of trade deal done with the U.S.?
Yeah, I saw those headlines, and my immediate reaction was, unexpected? Why is this unexpected? There's a trade war going on. We've been seeing the rumblings and warning signs. There have been statistics coming out for months about this situation really starting to bite over there, even to the degree of clothing and sneaker manufacturers looking to build factories in Vietnam or other places instead of China now to get out of the way of this thing. So no question that it's biting. My question is, why is anybody surprised to see these numbers turn down? But of course, the million-dollar question is, does this bring them more seriously to the negotiating table? I sure hope that happens and that we get even freer, better trade than before, where property rights are respected on all sides. I think that would be great for the global economy going forward. I'm a little leery of promising that. I sure hope so, but both sides have very strong personalities that need to be able to go back to their supporters and say we have a win. That's the difficulty. I think both sides clearly want to see this end. I think both sides are feeling the discomfort. We talked about Harley Davidson and whatever. Both sides are starting to feel the pinch. I think maybe the Chinese more than the U.S. But both sides need to be able to go home and tell their constituencies that we got to win out of this. So massaging that outcome is I think, a real challenge. But no crystal ball again. But my sense is that the desire on both sides is strong enough that we do get a deal at some point. And it may be all words. I mean, at this point, it doesn't really even matter if the deal is any better than what happened before. All that needs to happen is for both sides to say, oh, we have a new deal. Like, renaming NAFTA, right? If we can go back and say we have a new deal and it's better, then we can stop the war, go back to business. And by the way, for your listeners, I think this is one of the key variables this year. When that ends, I think we see a lot of pent-up demand and forward contracts roll into the commodity space. People have been worried about this, and I think that has had a larger impact on commodities than the actual economic realities justify right now. In other words, there's been more downdraft on commodities than the reality of the war should have exerted so far. So when that comes off, I think you release that pressure, and all the people that have been holding off, maybe drawing down inventory, they start going back into it again. And I think we see an outstanding year for commodities after that. But first, we need the war to end. So I'm bullish on commodities in large, but I want to see the trade war, at least some semblance of ending or victory or whatever, some big announcement that tells everybody it's back, it's okay, we're back in business. And then I think that's when I start looking at the industrial commodities again.
Newmont has confirmed their purchase of Goldcorp for $10 billion. Is that a big hunk of cash to be thrown around in the gold business right now?
Actually, I think that's no. I mean, given the scale, these are two of the largest gold producers in the world. And of course, you just had Barrick buy Randgold and take the crown of, it's not a good reason to buy another company that you don't want to be the second largest anymore or something. That's not a good reason to buy, but I have to suspect there's some ego involved here. And now Newmont gets to say, oh, we're the biggest again. But that aside, I think there really is something to be said for synergies and economies of scale, and combining the assets would allow them to operate, some of them, I think, more efficiently. That makes sense to me. I do think that's real. And I think actually I like the combined Newmont Goldcorp much better than the Barrick Randgold. The political risk profile of the combined Newmont Goldcorp is much safer. And I actually think both of those companies, Newmont and Goldcorp separately, are pretty good companies. They know what they're doing. They're strong operators. They don't always get everything right. When gold prices are down, they get beat up. But they have large numbers of very competent people on both sides there. So the question I would have if I was a Goldcorp shareholder, I'm not sure I really see all that much in it for me. I'm not sure I see this really helping my share price go up. I mean, maybe the combined company gets a re-rate and there's a bump there. The combined company can now say it has bigger production than it did before, but it's not that big. I'm not sure if I was a Goldcorp shareholder, I might see more upside in Goldcorp by itself, which is a smaller, more volatile in the good sense company. So I wouldn't guarantee to anyone that this deal will go through, despite it being friendly and management from both sides being on board. I'm not at all sure that the Goldcorp shareholders will sign up for this. Though I do see, broadly speaking, that the combined company could be a good thing. I think maybe for your listeners, the more important question really is what happens to the non-core assets and to the junior partners that both companies have. As Newmont and Goldcorp combine operations in certain sectors, they may have each separately JVs with juniors in those areas, and they may decide, well, we don't need all of these. We'll pick the three best or something, and terminate JVs or options to earn into JVs on perfectly good projects that some juniors have. That would be bad for those juniors. On the other hand, you could have some juniors that have really great assets that one or the other of these two big companies is earning into, and they put a lot of money into it, and they've expanded the resource or something, but it's not quite big enough for this new, even bigger gold miner to emerge. So they could give the project back after spending millions of dollars on it and adding real value. And now the junior gets all that work for free. So that could actually work to the benefit of some of the juniors. And then the other thing is, as the combined company spins off non-core assets, they've already said they're going to sell $1 billion to $1.5 billion worth of non-core assets. I mean, if I was a mid-tier, I'd be licking my chops right now. There could be some really great assets that aren't really that big a deal for the combined Newmont Gold Corp, but would be a fantastic asset for a mid-tier. So I think this is kind of exciting. Actually, I see this sparking a lot of activity on the smaller and mid-tier level, and ultimately, on big picture, as these big companies keep gobbling each other up, at some point there's no more companies to gobble up. They're going to have to start reaching down the food chain to the mid-tiers and to the juniors. So, end of the day, I think this kind of M&A activity brings a lot of opportunities. It's net likely to be positive, but you got to be careful.
Lobo, thank you so much for chatting with us.
Glad to be back, as always, Jim.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.